Welcome back to ICT Trading Concept. After a very bad week, we are here for a better week. I believe that this week is going to be very fine, but we will see. At the beginning, I would love to say something else. I know, guys, most of you are actually bored with last fair value gap and entry fair value gap. So here is the good news for all of you. From this week, we are going to start a new journey with BPR, Balanced Price Range. Today in this weekly analysis video, I will just give you some introduction, and from now we will start to use the balanced price range theory in our price action. So it's gonna be a little complicated as well. I believe that slowly but definitely, day by day, we will get the BPR. How to use the consequent encroachment of the fair value gap exactly, we will learn that. So let's go to the video. At first, what you should do at the weekend, Saturday and Sunday, you have to start with the calendar. Here I'm using Forex Factory as my calendar, and I only love to see only the red folder news and the medium impact news. Okay? So we can see in Monday we don't have any news. Then Tuesday, Wednesday, Thursday, Friday we have a lot of news. Okay, most of the newses are around 8:30 and 10 in the morning session. From here, I would love to add something else, and that is, if there is no news around Monday, then there is no trade, not any trade. Okay, you can't trade in Monday. You have to start your trade from Tuesday. This is forbidden. You have to do it. When you will know about the newses of your coming week, you are done, and you will know that when you are going to expect the volatility. So always be careful about the red folder and the medium folder news. Try to avoid them. Try to trade after the news, okay, not before the news or around the news. So wait until the news release, then try to catch some moves. Here is the dollar index. I would love to start from the weekly chart, and yeah, so far you can see there is my buy side liquidity, this high and that high. There are the buy side liquidity, and this is the monthly fair value gap. This is the bold line. You see the bold black line. This is the monthly fair value gap low, monthly fair value gap high, and the consequent encroachment of the monthly fair value gap. Just below the consequent encroachment of the monthly fair value gap, I have this relatively equal highs, which is also called the obvious liquidity. Okay, this high has taken by that high by a shallower, so it is called the obvious liquidity. Why this high? It is not even a single swing high. So why I marked it? It's because this is from the monthly chart. So from monthly chart, every high is liquidity. Every single high is liquidity. You don't need the swing high. If you get the swing high, it's cool. If you don't have, no problem. You will look for some kind of relatively equal highs. Okay. So this is the buy side liquidity and the monthly consequent encroachment. That is primarily my target. That means this week market will go toward that liquidity and the monthly consequent encroachment. I mean monthly fair value gap consequent encroachment. At the same time, if you look over here, what price has done? Price went lower, trade the monthly consequent encroachment, weak consequent encroachment. That is called also the last fair value gap. So price tap over there. If you go to your monthly chart, you will see this is a week actually. So the 50% of that week is called the monthly week consequent encroachment, which actually react as a last fair value gap. Then this is also the weekly fair value gap or the last fair value gap. Price came here, went higher, gave you the market structure shift, then trade the inversion fair value gap. But it didn't trade the fair value gap. Instead of that, it has traded the inversion fair value gap. Is it valid? Absolutely, it's valid, because when you will see that fair value gap over here, that is our A++ setup. That doesn't mean price can't trade the inversion fair value gap. That means inversion fair value gap is not important. That's not true. Inversion fair value gap is also very important. Here I have the breakaway gap. Just let me mark it. This gap is working as a breakaway gap. Okay, so okay, I'm sorry, just let me add that breakaway gap over there, so that over here and weekly. Okay, so I'll go back in weekly chart one more time. Sorry for that. Okay, there is actually our weekly breakaway gap here. Okay, and market came to that inversion fair value gap, failed to trade the breakaway gap. When it has failed to fill that breakaway gap, that is kind of confirmation that market is actually going higher. So we actually should expect some kind of extreme run. Perfectly market went higher. I told you that this week, okay, this is that last week candle. This week is going to be unpredictable for me. It is very difficult for me to trade, and you saw what happened last week. I'm not interested to talk about that. But when market close above here, above that candle, here is the order block. Okay, this is the order block, the opening of that consecutive order block. Now, why I marked that one instead of this last one? Because you can see it has traded that order block opening as well perfectly. But why I didn't mark that one? Instead of that, I have marked the consecutive order block. Watch my order block video to my channel. You will understand about the when you should mark the consecutive order block and when you should go for single candle. So price trade that order block. Look how beautifully body closed at that order block level. Then boom. This is the area I want to see unfilled. Okay, this area I really want to see unfilled. Don't worry about this BPR. I will talk about this BPR little later. Okay, so I will talk about that, but not now. Little later. This is the area which I really want to see unfilled. Okay, because market has given the market structure shift, trade the fair value gap, went higher, then trade the order block, expanded. This is the first fair value gap that should be unfilled until it has taken the buy side liquidity. This is my primarily expectation that market really would love to go higher to take that buy side liquidity. It can trade that unfilled area, but it has to leave some area open. Okay, that should be happen. If you ask me, I really would love to see it will directly go higher and take the buy side liquidity. It will never trade this fair value gap. If it even trade this fair value gap, it can't close this fair value gap perfectly. It should not do that. What is the benefit of seeing this? If it failed to trade that fair value gap and started to keep going higher, if it has taken this buy side liquidity, I will start to think that it will reach until that monthly fair value gap high. Okay, monthly fair value gap high. It will reach until that area if it left that area unfilled. The way it left it over here, this is the breakaway gap. So if it worked as a breakaway gap, I will believe that market will reach at least until that monthly fair value gap high, until that area. If it trade that fair value gap and filled it by body perfectly, then I will be very caution. I'm very careful when it will reach to that constant encroachment, because that will be a perfect area for reversal. This constant encroachment will be the perfect area for reversal. So this is why this area or this fair value gap is important. Now, if I see market is actually going to close this fair value gap, okay, so it has closed this fair value gap perfectly. How far it can reach? It can reach until the constant encroachment of that balanced price range area. Okay, it should not go or it should not close below the constant encroachment. Body should not close below the constant encroachment of that BPR. So this is the perfect when you should use the constant encroachment most of your time. Most of your time you are going to use the constant encroachment of the fair value gap from BPR or the breakaway gap. When you are going to use the breakaway gap, you will use the constant encroachment. When you are going to use the BPR range, then you are going to use the constant encroachment. If price close this fair value gap again, okay, if price close this fair value gap perfectly, it can reach until that BPR area, okay, it can reach until the high or the constant encroachment of that BPR area. When it will reach over there, if it happens this week, then it will be perfectly bearish, and the very next week I will be bullish again. Okay, So this is two type of scenario. If market really would love to go higher, then it will go to and take that buy side liquidity over there. If market would love to go lower, this BPR is going to be the last range for as a target. Okay, so how far it can fall until that BPR constant encroachment. Why this is BPR? Because this is a sell side imbalance, buy side inefficiency. Market went lower, now it went higher. It closed that sell side imbalance and buy side inefficiency. That means there is no buy side inefficiency, not anymore. It's not balanced price range yet. It's repriced. Okay, this parallel gap is now repriced. In my opinion, it's not balanced, but yeah, as ICT told, I have already made a video about BPR. You can watch that video. Over here, when market will came to the top or to the constant encroachment, then it will take the high or the relatively equal highs. It will be balanced then. Perfectly it will be balanced. Or maybe it will go through this balanced price range again. Then it will tap to the low or the constant encroachment. Then it will take the sell side liquidity. Then it will be balanced. In my opinion, okay. This is my experience and this is how I actually look the BPR or the balanced price range. This parallel gap is not balanced yet. It repriced but not balanced. Okay. So here is two type of situation. You see from the weekly chart a lot of things. If you are confused, watch this part one more time. Okay. I'm going to daily chart to see what is happening over there. So over here, I just kept that BPR to my chart because it can be the target for this week. At the same time, you see this is the daily fair value gap, entry fair value gap, last fair value gap over here. Okay, so this is the entry fair value gap from daily chart, last fair value gap. What do I have it? Here I have this volume balance. Price tapped to that volume balance low, went lower, came to this daily fair value gap or the bullish entry fair value gap from daily chart. My perfect or expectation is market will go through this volume balance this week and it will take that buy side liquidity. It doesn't need to close this daily fair value gap this week. It doesn't need it. Okay. Well, what it can do, it can tap to this monthly fair value gap low one more time because you can see how beautifully this monthly fair value gap low is holding the price. Okay, one time, 2, 3, 4. 4 times this monthly fair value gap low is holding the price. So this is a very strong support zone. And over here, this volume imbalance, it just tap over there. This is the reaction until the entry fair value gap from the daily chart. It should expand higher now. So I don't want to see any lower run. Instead of that, I would love to see it will keep going higher until at least that buy side liquidity. Okay. So here from the daily chart, this is my expectation. If market can close this daily fair value gap, then it should reach until that last fair value gap. So over here, this is the last fair value gap. Around the same area, you have this BPR or the balanced price range from the weekly chart. So we will see how far it can reach. Okay. So this two type of condition, we will decide it from Tuesday because Tuesday is our first news or volatile day. So we will see what is going to happen this week, which should be the target. Really market would love to go higher or lower. It should not do this type of things. I mean, it should not close this daily fair value gap. Then this, it should not do this type of things. Okay. If it wants to do it, we will see that as well. But in that type of situation, this monthly fair value gap low will play the important role. What do I mean by that? I mean, if market go lower, body closed below this daily fair value gap. Okay, below this daily fair value gap, body closed. Then it started to go higher. Then I will expect this monthly fair value gap low is going to be the resistance, or this, see this daily fair value gap, it's going to be repriced by that run. It's going to be repriced. So I will expect either if market really would love to go lower, this daily fair value gap will be my BPR area. Price will trade that BPR area, then it will fall. If it break that BPR, the highest run is the monthly fair value gap low. So this monthly fair value gap low will hold to the price, send it back. If it's broken, the same thing is going to happen again. The BPR is now going to be balanced by trading the upper portion of here, and then it will go over there. Okay, so here again I'm gonna explain this part. I'm sorry if the video is going to be very long, I guess, but I'm sorry for that. I have to explain it perfect. Okay, if market went lower, this is what is this? This is buy side imbalance, sell side inefficiency. That means I don't have the sell side over here. I need the sell side. When market will close below that fair value gap, then I don't have any inefficiency for the sell side. That means it is repriced. Now it has to be balanced. For balancing this, it can do two type of things. First thing, it can trade the low of that balanced price range or the constant encroachment of that balanced price range. Then it can go lower and take the liquidity. It can make this balanced this way, or it can reach until that area, this balanced price range area from weekly chart, or the constant encroachment of that balanced price range. At the same time, this is the last fair value gap from daily chart, so it can reach any of this area. Then it will go through this daily fair value gap over there, tap to that balanced price range or the constant encroachment of that balanced price range, then it will go higher. Now it is not going to happen by 1 week, I believe. Even if it would love to go higher like this way, then this week will be bearish and the next week will be bullish. So I'm talking about 2 weeks over here. Okay, if market really would love to go lower, it doesn't want to go higher, so it can do one more thing over here. You could see that market it tapped that monthly fair value gap low over here, but body will close below the balanced price range constant encroachment. Body has to close below the constant encroachment of that balanced price range. Why I'm talking about the balanced price range right now? This is daily entry fair value gap. But if market close that daily entry fair value gap, then this fair value gap will turn into the balanced price range fair value gap. Okay, so it can reach until that monthly fair value gap low. The wick will tap over there. This low will act as a resistance and market will reach lower. So this is the situation, or this is the two type of situation this month can this week can happen from daily chart. I'm going to hourly chart. Let's see what do we have in hourly chart. So in hourly chart, you can see market has traded that daily volume imbalance. It has traded the week 50%, the constant encroachment of that last week. It is also used as a last fair value gap. Went lower. This is the fair value gap, last fair value gap. Price trade that last fair value gap, went lower again. This is the order block. If you'd love to mark the constant encroachment, over here I didn't mark it perfectly, so over here this is the order block. That was the consecutive order block, and this is the perfect order block. Because market has traded until that area, I'm gonna mark it. Okay, so it has traded that area, okay, over here. Now it can reach lower. At the same time, last week, if you remember, this is the 4-hour fair value gap. Why I have marked 4-hour fair value gap, I explained that in my live. And you can see market actually tapped to that 4-hour fair value gap. Nobody closed below that 4-hour fair value gap constant encroachment. No, not even a single body closed over there. Okay, I told that if really market would love to go higher, it should not work with the lower part of that fair value gap. Over here, you can see the last fair value gap. It has worked with the upper part of that fair value gap, right? So it is kind of a sign that market really would love to go higher. So far, it tried to break that 4-hour fair value gap, monthly fair value gap, and also this daily fair value gap. It failed. Okay, it failed. And now this order block should be broken. Around here, what do you see? Let me show you. What do you see? This is called balanced price range. Over here. This is okay. Now you can see. I'm sorry, not balanced price range. I'm extremely sorry. I was trying to talk about the first fair value gap. I just told balanced price range. Price went higher, trade that area, last fair value gap. At the same time, this high is the highest high, which is not taken by that high, but every single other high has taken, right? Every single other high has taken. This high has traded the last fair value gap. it's gonna be little complicated, but you wanted this, right? So I'm gonna talk about this. This is the first fair value gap. Price trade that first fair value gap, went lower. How far it went? My rules was it will reach until the entry fair value gap. Now you can say, brother, there it didn't trade the entry fair value gap because I don't have any entry fair value gap. If there is any entry fair value gap, that should be the last area. I guess I have an entry fair value gap. I guess. Yeah, there is a very little, but yeah, very little entry fair value gap over there. So it has, at least it should reach until that entry fair value gap. Okay, it's very little, very little. I'm marking because I don't have any other option, because the price was very messy over there. But you can see this is the entry fair value gap around that area. There was a very small portion of the fair value gap, but yeah, it is what it is. This is also the first fair value gap. Price came here to that order block. It should go through this order block. That is my expectation right now. Why? The reason is, from weekly chart, from daily chart, we are expecting market will go higher. There should be a unfilled area from weekly chart. This is the daily entry fair value gap, and price worked with the upper portion of that entry fair value gap. Then market has made for a fair value gap, has worked with the upper portion of that hourly fair value gap. Now it should went through all of this area, and it should reach until that buy side liquidity, okay, from hourly chart. So at my beginning, I'm bullish. I'm expecting that market will reach here to that buy side liquidity, and it's not going to work with the lower part here. I mean, below this, it should not go below this low. If only if this fair value gap is broken, the body close below this fair value gap from daily chart, then my target will be here, this balanced price range from weekly chart. Okay, so this daily fair value gap will turn into the balanced price range as well from daily chart. So this is the weekly daily balanced price range area, and this will be the daily balanced price range area. Though I really don't want to see that. I would love to see market will keep going higher until that buy side liquidity. Okay, that is my expectation. Again, guys, everything I'm doing here, this is for only educational purpose. I'm not a financial advisor, so do your own analysis, and if you like to take my analysis as a reference, you can take it. Okay? Now I'm going to Nasdaq. Over here, you can see this is the weekly chart for Nasdaq. It came here to that weekly order block. I don't know who thinks that it's a clean run toward the sell side liquidity. I will still say this is a weird price action. In my Twitter, I have already shown you that some Jet Capital, then some other bigger guys, okay, who are actually, you believe that they're the famous, okay, I mean they're the best. So these best people told that last week was just unpredictable. Okay, some people I don't know what is the level of understanding the price action. They thought that this is a very clean price action, a very clean run. They knew that it is going to happen, but I have seen that it didn't follow any rules. It has broken every kind of situation. We can see the reversal or fair value gap respect anything. Okay, the price was absolutely shitty price action last week, and you just see the candle. Okay, just compare this candle with all other candle. You will understand how the price action was last week. Now, whoever is thinking that it was cool, I don't know what to say to them. Maybe you guys are really good. I'm not that good. That's why I told that before starting this week. I told that I'm not gonna trade this week because it's gonna be very weird because of the current situation of the world. So far, it has reached to that weekly order block. This is the min threshold of that weekly order block. I will see if it can reach until that min threshold. And yeah, this is two type of situation. It can go toward that buy side liquidity now, though I don't want to see that. I would love to see market will go a little more lower. At least it will work until that min threshold, and then we will see how it react or something. But I really don't want to see market will reverse this week. I mean, some kind of boom, something like that. If it happens, it can happen. I am not telling that it can't happen, but I don't want to see that. Okay, I would love to see market will stay over here for this week around this area. Maybe it will take this relatively equal lows, this low and that low. they're relatively equal lows, so market will go toward that relatively equal lows. If this order block is broken, then I will be bearish for a longer time. Okay, so for a longer time I will be bearish, though it's not confirmed that market has already made the all-time high over there. It's not confirmed yet, but if this order block is broken, that means a body close below that low, then I will start to think, okay, maybe for a longer term market is going lower until maybe this fair value gap, that fair value gap, or that fair value gap. But here this week I'm really expecting some kind of volatility because of the news, but yeah, we will see. Okay, from weekly chart I'm bearish. Let's go to daily chart. So here is the daily chart, and you can see this is that weekly order block, weekly mean threshold. Okay, this is that daily last fair value gap which has been broken last week. It has been broken. So in Monday market is going lower. Okay, maybe again, okay guys, it's not confirmed. That is my expectation. The opening of Sunday is going to start below the closing of the Friday. So I'm gonna predict the opening because of the price action. My experience with, depending on everything, okay, I'm expecting the Sunday open is going to be below the closing of Friday. So below here somewhere. Okay, everything can be changed by the Sunday open, but I'm expecting like that way, and it will reach until that mean threshold or the last fair value gap here. Okay, around until that last fair value gap, it will reach until that area. Then we will decide if market really would love to go higher or it will keep going lower. Okay, we will see that later. At the same time, you can see this is the buy side imbalance, sell side inefficiency. Market tap to that area 1, 2, 3, 4, 5, lot of time. Then market closed that area, that buy side imbalance, sell side inefficiency. So I had the sell side inefficiency over there. Now when I got that candle, do I have any inefficiency, sell side inefficiency? No, I don't have. Look at the upper portion of that fair value gap. The upper portion of that fair value gap is perfectly balanced. Okay, lot of time sell, buy, sell, buy, sell, buy, lot of week. So this portion, the upper portion of that fair value gap has fully balanced. The lower portion is still imbalanced. It's not balanced yet. You can see when this one is closed, price trade that low went lower. Now if it can go much more lower, and if it can take some kind of obvious liquidity, I don't see any obvious liquidity yet. I don't know if there is any obvious liquidity or not. Yeah, maybe this low and that low, they are relatively equal lows. Some kind of obvious liquidity. If it can take that on, then it's gonna be balanced. This fair value gap is going to be balanced. What is the importance of balanced price range? If it is balanced, then I am not going to expect market is going to respect that area. Okay, that fair value gap, market is going to respect that fair value gap. I'm not going to expect that. Again, what is the importance to know about the balanced price range? The importance of knowing balanced price range is, I will expect market is not going to respect that area anymore. Okay, so it closed below that balanced price range, tapped to the low. The rules is it can reach until that constant encroachment. Nobody can close above the constant encroachment. It will tap to that constant encroachment or the low of that balanced price range, then it will take the sell side liquidity. You can say, brother, it has taken that low, so it has taken the sell side liquidity. No, it's not sell side liquidity. There is no relatively equal lows. So until it take the relatively equal lows, this is not balanced price range. You can see this low has taken by that low. So this is kind of obvious liquidity because of the shallow run. If market can reach until that mean threshold, then I will remove this balanced price range area from my chart. Then I will no need to keep that area in my chart. So from daily chart, I'm not expecting that market will go higher. I really don't want to see that. Not even above that daily last fair value gap. What is this daily last fair value gap? Look, this daily last fair value gap. I'm gonna change it as my balanced price range now. Why, brother? Why did you change the balanced price range. The reason is the last fair value gap is broken now, right? Body closed below that last fair value gap. Specifically, what is this fair value gap? This is buy side imbalance, sell side inefficiency. So here, when this candle closed below that fair value gap, there is no inefficient area for the sell side liquidity. Sell side has delivered already. Okay, so it's now repriced. All I want to say, market will tap to the low or until the constant encroachment, then it will go lower and take the sell side liquidity. That is my expectation so far. That is my expectation. If market go through this balanced price range one more time, then my expectation will be market will tap either the top of this balanced price range or until that constant encroachment, then it will go toward that balanced price range. Okay, maybe until that low or the constant encroachment. Until that area, market should keep going higher. Should keep going higher. At the same time, what do you have over there? A new last fair value gap from daily chart. So this is the last fair value gap from the daily chart. So until that last fair value gap, I will be bullish if this thing happen. Okay, but that is not my expectation. My expectation is market is going. Sorry, let me actually remove this line. Remove that. Okay, my expectation is market is going to either tap to that low or the constant encroachment. Yeah, wick can go little higher. Body has to close below that or at the level of that balance price. Then it will reach until that mean threshold from weekly chart. Remember, or the last fair value gap. This candle low, this candle high. What is that? Last fair value gap from daily chart. Until that area. What do I have over there? What else do I have? This is sell side imbalance, buy side inefficiency. Market went higher. It's repriced, right? This sell side imbalance, buy side inefficiency, it is repriced now. If market reach here to that top or that constant encroachment of that BPR and then it go higher, take some kind of buy side liquidity, it will be balanced. Perfectly, it will be balanced. Okay. Now, what else I can call that BPR area? What else I can say? I can call that BPR area. That is also the first fair value gap. Okay, remember that is also the first fair value gap, not a perfect one, but yeah, still this is the first fair value gap. Is the first fair value gap and BPR are the same? No, BPR and the first fair value gap is absolutely different. First fair value gap has some rules. BPR can create anywhere on the market, anywhere, wherever there is a fair value gap. Most of the time, I would love to use the last fair value gap or the entry fair value gap as my BPR area. Okay, most of the time, I love to use them from there. But yeah, still you can use the BPR theory as the way you want. So here you will understand when this is going to be broken, or you can use the last fair value gap as your entry. Okay, how can you use that last fair value gap as your entry? You have to think about the BPR over there. So that's all from daily chart. I explained two possible way, and if you're confused, please watch that part one more time because it can be confused. Okay, it's gonna be little complicated from this week because you guys wanted it another level. So I'm gonna go one more step ahead so that you can learn something more. You can add more thing on your chart. You want complicated things? I'm gonna give it to you. Don't worry. So here is the hourly chart, and you can see I would like to talk out from here. Okay, this is the last fair value gap from hourly chart. So price tapped to that last hourly fair value gap, went lower. This is that BPR area or the last fair value gap. If you remember from the daily chart, it went lower. What is this two blue line? Just forget about this BPR. What is this two blue line? Entry fair value gap. This is your last fair value gap. Price trade to that entry fair value gap, went lower, closed below this BPR area or the last fair value gap from daily chart. What do you have over here? Still you have the BPR. Now how it's going to be the BPR? Remember, this was the last fair value gap when market came here. I was thinking market is going to tap over there, then it will go higher. That was my expectation from that area. When market closed that last parallel gap, then it has filled the sell side inefficiency. So it has given me the sell side over there. It's repriced now. Okay. Then price tap to the low or the constant encroachment. Nobody closed above the BPR constant encroachment. Went lower, take the relatively equal lows. This low and that low, they are relatively equal lows. This is now absolutely, perfectly, completely balanced price range. This fair value gap is now perfectly, completely balanced price range. I am not expecting any kind of reaction from this fair value. Can it work with this fair value gap? Absolutely. That is the entry fair value gap from that leg. It's different. But this fair value gap, the last fair value gap, which I was expecting, market will tap over there and it will go higher. This bullish fair value gap is now valueless in my opinion because it's absolutely perfectly balanced. Excuse me. Now, market doesn't need to reach until that balanced price range one more time. It doesn't need to reach over there, but it can reach until that fair value gap. See, there is another fair value gap over here. It can trade that fair value gap. What else do you have here? This daily balanced price range now. Okay, so price can tap the constant encroachment of that daily balanced price range or specifically this hourly fair value gap. Okay, so I'm gonna mark it as a hourly fair value gap. I don't want to see market is going to break that hourly fair value gap. That's I don't want to see. I would love to see market will keep. It will keep below or inside. The last line of the higher run should be the hourly fair value gap. If market went higher, closed above the daily fair value gap, I told you, okay, how I am going to expect that this balanced price range is going to be balanced. But my expectation is market will fall until this balanced price range, last fair value gap from daily chart or the mean threshold from the weekly chart. What market can do? Market can just tap to that last fair value gap or the hourly fair value gap. Not last fair value gap, sorry, the hourly fair value gap or the constant encroachment of the daily BPR, okay, then it will reach over here. That is my expectation from this week. We will see how it react, but yeah, so far this is my expectation from this week. When it will reach over here, maybe then it will go little higher or something, or maybe it will keep going lower. We will see that later, but so far this area is my target. So here to here. So this 337 handle is my direction for next week. Again guys, I don't know it is going to happen or not, but so far this is my expectation. Just if you really would love to learn this, you have to do your own analysis and you have to just take my analysis as a reference. Okay, so every part, if you are confused, you please watch twice. I promise you, man, trust me, it's not gonna be worthless. You will learn it, you will get it. Trust me, man. So this is the 15-minute chart. Now from 15-minute chart, well, I would love to see this BPR. So that was the last fair value gap from 15-minute chart, which has been broken over here. I'm sorry for that. Actually, the buy side imbalance, sell side inefficiency has repriced over there. Price tapped to that BPR one more time, went little higher, and then where price came, just look at here. Just look over here. What happened? It closed for the first time above the BPR. One candle closed. The very next candle closed below the BPR, right? So this is called the fake breakout. Price tapped to that BPR area one more time, where the body closed. Exactly where the body closed. At the level of the BPR or below the, constant encroachment of the BPR or below the constant encroachment of the BPR. Then it has taken the sell side liquidity. Okay, this low and that low, they were relatively equal lows. Market has taken that sell side liquidity. This 15-minute last fair value gap, which I have used as a BPR, is perfectly balanced now. I don't need that in my chart anymore. I'm not believing that it is going to give me any kind of reaction now. So just look at the BPR. Okay, so I'm gonna show you so many BPR from one chart only, from every time frame. I'm gonna show it to you. Watch from the beginning, you will see the BPR and you will get some idea from this video. Trust me, I'm gonna talk about this BPR for many times from this week. Okay, so it's gonna be a little complicated at the beginning, but definitely you are going to learn this BPR and how to use the last parabolic gap for your entry. Okay, it's gonna be very easier for you, slowly but definitely. So here from 15-minute chart, price actually was very messy for me. Just look over here from the last week. Just look at the weeks. Okay, it's not clean. It was not clean according to my thinking. I was looking for bull and market kept falling. I don't care about that. I told beforehand it's this week is gonna be very difficult to trade. Last week I'm talking about last week. It was hard for me. Okay, and I have shown you that not only me but also some great trader, they also called last week was really difficult to trade. Now maybe you were a genius, maybe you were better than anyone else, that's why it was easier for you. You trade like a pro. Okay, so I'm sorry. I believe that you have no place to stay in my channel or in my Twitter. You just leave me alone. Okay, I mean, whoever actually thinking that last week price action was very clean or very quite cute or good. Okay? So for that's the weekly analysis for this week. Again, guys, this is just my analysis. If you really would love to learn this concept, do your own analysis. I know my English is little difficult to understand, but try to rewatch this, or you can slow down the video so that you can understand, or you can use the subtitle if there is any problem. Otherwise, I believe that it's gonna be a beautiful, a nice week for all of us. Okay, so if you're new, don't forget to subscribe to my channel and please push the like button for me. Until the next video, cheers.